Hey everyone, thanks for tuning in to another week of Goodfellow Realty News Week here in San Diego. My name is John Reardon, and I just want to cover this week's latest topics. We start off with inventory. Still remains lower than ever. In fact, we floated with an all-time near low. The last that happened was back in 2006. Interest rates, they are on the rise. 30-year interest rate, fixed interest rate, is floating at around 2.81% right now. Might even get up as high as about another 0.25 percentage points, even from a week ago. So if you were shopping, rates are on the rise. There's no telling exactly what's going to happen, but we are predicting most likely some uptick in interest rates again. With the market will that market really cool off as a result of the interest rates? Many analysts are still forecasting that 2021 is going to be a strong housing market. Do I think interest rates are going to cause a cool down in the market? Most likely no. It's because there's still plenty of strong qualified buyers out there that can afford the price increase, even if that means paying a little bit higher in interest rates. Construction costs in lumber are slowing new builds. We've struggled for many years with getting new inventory on the market, so this is just an ongoing situation. Airbnb new regulations are coming. Owners of long-term residents will that are not present in the property for more than 20 days a year would be limited to a 6,500 citywide restriction. So in short, 1,100 in Mission Beach and 5,400 for the rest of the city would be essentially approved. Researchers have calculated what that looks like based on last year's numbers, and they're predicting about a reduction of 1,600 to 1,800 of whole home rental listings for Airbnb purposes. So what does this really mean? This means that there's going to be a squeeze in that industry on a local level, and it'll be interesting to see who gets approved, who does not get approved for that regulation that's coming. Local employment data confirms a K-shaped recovery. What does that mean? That means that the higher wage earners are likely seeing an improvement in the job market from a year ago, while the lower portion of the K, low wage earners, are seeing a drastic reduction. Typically those are renters, and that explains why the market has not really seen any slowdown. It's because that top wage earners are still doing just as good as they were a year ago, if not better. Thanks for watching, and until next week.